Well, your major averages closed the week higher, this in part because consumer confidence and the economic outlook continue to rebound. In fact, consumer confidence at its second highest level in 14 years. We're at one of the lowest unemployment rates ever. Optimism just raging big time. All of it, well, most of it recently centered around the new tax regime. And now people feel a lot better about that than they do about the volatility in the stock market. How comfortable should they be, and what should we expect to see next week? I brought in two of my best friends to talk about this. David Nelson, Bell Point Asset Management Chief Strategist, and Chris Vercace, Tematica Research CIO, co-founder, also author of Cocktail Investing. Chris, what should we expect now? Of course, we've got the three-day weekend. We had a big down week. We had a nice up rebound. And where do we go from here?
Well, I think, Charles, if we trace back what kicked off the tumultuous beginning of the month, it was that January employment report and the specter of inflation. As we saw this week with the January CPI report, the core inflation rate was in line with what we've seen over the last several months. So it doesn't appear that inflation is heating up. So what's going to set the tone for next week? We get the flash PMI for February. People are going to be digging inside of that just for more confirmation on, the inflation numbers. Is it still, relatively tame? That, I think, sets the tone for the market. And if we see that, I think the market continues to move higher amongst a sea of earnings.
Chris, let me ask you then, because, you had the wage increase 2.9% year over year, which to me is nothing if you look over the last 10 years. But having said that, it felt like there was some inflation in the import-export numbers. There was some inflation in PPI. So we continued to see the so-called inflation gains, but it didn't seem to hurt the market anymore. It wasn't like a punch out of left field. Has Wall Street come to grips with the fact that we're due for a little bit of inflation?
Well, a little bit of inflation is good, Charles, too, but also remember, we got some other data on real wages in January that showed 80% of the workforce actually saw wages contract, a trend we've seen over the last, 4 or 5 months. So I think that took some of the wind out of that inflation argument. And again, 1.5, 1.8% is good. It's still not where the Fed has to be, 2+% in order to say, hey, we might go from 3 to 4 rate hikes this year.
Dave, how do you see it?
Look, I think inflation's picking up more than we're alluding to here. We're not even talking about the service sector, where we're seeing a fair amount of inflation. But I think this week, dramatically, with the market coming back, I think investors just looked at the landscape and said, you know what, we can live with a little bit of that. And the underpinnings of this economy and the underpinnings of these companies are just that strong, and hence we had this, dramatic recovery.
I mean, listen, the Fed's goal was to generate some inflation. I mean, we want our paychecks to inflate. We want our assets to inflate. And we certainly want people to make more money in this country. This is where it always feels like there's a major disconnect between Wall Street and Main Street. Main Street is saying, guys, this is nothing. We need a lot more than this. And whatever you do, the folks who pull the strings, don't derail us as we're moving this train out the station.
The Fed is caught between a rock and a hard place. They may want to slow down a little bit, but, they have to reload. They don't have a lot of ammunition right now. Eventually, someday, we're going to have an economic turndown, and they're going to need some ammo in there. They want to hike those rates right now. But I just think the fundamentals of the economy and these companies are just that strong. And hence, this time compression that we felt, it hurt. It was uncomfortable. But certainly,
so can we turn up to new highs from here?
I think we can. I can't believe that we can continue at this pace. If we can just hover around the 100-day even and pull back to that, that would be, pretty decent. I could live with that.
Chris, can the market now find its equilibrium? Has it found its equilibrium? And if so, can it get back to new highs this year?
Yeah, I think it has found its equilibrium, Charles. Again, that specter of inflation is kind of on the back burner now. We'll continue to watch for it. But we've got more earnings. We're still yet to see the full benefits of tax reform. And we're going to see more jobs. We're going to see more people with better paying jobs come out of this. We haven't even seen the benefits of infrastructure spending yet. So there's a lot of good news left to be had that says to me earnings can still move higher and the market can move higher as a result, even if the multiple is flat.
All right, gentlemen, thank you both very much. Have a great weekend. We'll talk to you next week. Coming up, the see something, say something model has proved woefully inefficient and preventing a lot of things, including a deadly shooting in Florida. But it's not citizens, it's the authorities. What can they do to make sure that when we share this information with them, they take it and they do